Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss the latest on COVID-19 and also how consumers around the world are coming back to work. Phil, it's great to see you. And COVID-19 update. Certainly there's a lot to discuss there.
Yeah, I mean, the news on President Trump seems promising. It sounds like some of the special cocktails he was drinking on Friday night are working. And he says he's going to be coming back to the White House potentially today. So that's been good for the market. Also good for the market has been news that the stimulus talks are ongoing. So potentially that will reduce some of the furloughs and add some money into the retail system as well. In terms of COVID cases, it looks like Spain and a lot of Europe are still seeing pretty strong cases per day, but Spain might be starting to level off a little bit. And the US, it looks like we're kind of stuck at around 40,000 cases a day, which is pretty high, really. And it's not really getting any better. So I mean, compared to Europe, we're running a lot higher and sort of, I guess, living with a lot more COVID in the economy than other countries. And it's kind of interesting to see how that's potentially dragging on some of our confidence to get back into subways and get back into the cities and do some work.
And let's talk about jobs growth. We're still seeing the same thing play out where low wage earners are struggling.
Yeah, so there's definitely some evidence that the wage earners are actually, that the jobs that are still there are people earning good wages, and a lot of the jobs that are not coming back are the people with low wages, and that's obviously kind of distorting what the retail spending picture potentially is, but also not good for the reams of people that would work in the retail industry and in the restaurant industry, potentially in travel and tourism. That maybe aren't so well paid, but there's a lot of people, and that's why the unemployment rate's kind of getting stuck at a highish level around 8%.
Yeah, and talking about the recovery, China's recovery seems to be they're somewhat back on track.
I mean, it's kind of amazing, really, considering China had such a strict shutdown and basically reopened their economy months ago. We've been talking about this off and on, but the risky activities, things like riding a subway, things like getting back on planes and trains, even in China, has taken the sort of retail consumers a lot longer to get back to normal than you'd expect if the risks have become really low. And I think that speaks to the fact that whether or not you tell people the economy is open, the consumers will do what the consumers want to do for their own health and safety. And that's why in America, if we're a bit too laissez-faire about coronavirus and its spread, you run the risk of prolonging or increasing the stresses on industries like restaurants and tourism. In China, the data is now showing that subway usage is pretty close to back to normal. But as we said, it's taken months. The flip side is China didn't have such a big drawdown on their stock market because they got rid of the coronavirus fears pretty quickly. And their stock market has actually recovered even better than ours. So arguably their tight shutdown and sort of get back to work safely has actually helped their markets.
Well, it's really interesting, if we were to do this experiment where we social distance, wore masks for 2 to 3 weeks, and we made some progress with it, potentially we could see that kind of recovery as well. But saving something fun for last, I love when you take a look at these polls, Phil. You can really discern some interesting information from these.
Yeah. So what's interesting, I think, about this chart is nobody knew that President Trump was diagnosed as positive until the very last bar in this chart, where the price of a potential Pence win in the election was closer to 7 cents. But you can see that trading that happened 5 hours before. We have a little bit of a leak in the White House, it would appear, where there was a whole lot of trades put on. The price of a Pence presidential election went from 1 cent to 3 cents. So people were willing to pay quite a lot more than the going rate on quite a lot of volume 5 hours before anything was known publicly. I guess it kind of speaks to the fact that it's important that stock markets have supervision and controls over things like insider trading.
It certainly is interesting, Phil. Thanks so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.